Hey, what's up, YouTube? So for those that know me, they know me as the fitness guy. I used to be a competitive bodybuilder, competitive powerlifter. I also own a sports supplement company. But a few years ago in 2022, I got really into investing and buying stocks. And over the course of the past 3 years, I spent a lot of time researching companies, investing, building up a portfolio. So I want to start teaching other people what I've learned. And the reason why is I feel like a lot of people are scared to invest because they don't understand investing. They think it's very risky, that they're going to lose money no matter what. And I think just giving a general explanation of things and teaching people just the basics. I'm not an expert. Oh, by the way, nothing of what I say is financial advice. I don't know what I'm doing. Don't do what I'm doing. I'm just sharing what I'm doing to help you learn so you can do your own research, make your own decisions, decide what you want to do. But the whole purpose of this video is to kind of give an introduction to investing. And also, what I want to do is something fun for myself and I think would be entertaining and educational for other people is I'm going to do a $10,000 portfolio challenge. Now, the goal of this portfolio is simply to beat the returns of the S&P 500. The S&P 500 typically returns about 10% per year. I'm going to try to beat that over the course of this next year. So this is September 2025. My goal is to deploy that $10,000 cash by the end of this year, by the end of 2025, and then see if in 2026 I can beat the performance of the S&P 500 with this portfolio. Now, a few of the rules for this portfolio, I guess the main one is no ETFs, which I'll get into what an ETF is, but basically it's just a basket of stocks picked for you. So I'm going to wait to talk about that because I want to talk about what people who aren't comfortable buying individual stocks should do. But so that's the main rule for my portfolio. No ETFs, and I want to limit it to no more than 10 stocks at a time. I don't want to buy 20, 30, 40, 50 stocks. I want to limit it to 10 high quality stocks. So before we jump into exactly what I'm going to do with that portfolio, I just want to show the returns of my other portfolio, which I'm not going to disclose the amounts. I don't think that's important. I just want to show what I'm holding in that portfolio and how it's done over the past couple of years. I think this portfolio was started in 2022, so it is 3 years old. And again, when I started investing, I wasn't investing a ton of money. I slowly started investing more and more money. As I got more comfortable, got more confident, I realized that investing really is a gateway to grow your saved money over time. I don't view it as a way to get rich quick. Like, I don't think I'm just going to buy one stock and become a millionaire overnight. And I think that's another place where a lot of people get investing wrong, especially with a lot of the crypto and the coins that go crazy overnight. People think they're just going to buy one stock or one cryptocurrency and suddenly become rich, and that's really not the case. You should view investing as a way to steadily grow your money saved over time, and that's going to compound and keep growing. So when I look for stocks I want to invest in, I choose stocks that I think are safe but also have a great runway to grow. I try not to invest in anything too risky. When I very first started investing, I think that was 2021, I had a different portfolio. I didn't invest in risky stocks per se, but I did not look into the full financials of the company, like the rate they're growing, their debt, their free cash flow, things like that, because honestly, I didn't know. So over time, we are going to go over that stuff as well. This video is kind of more so just an introduction to what I'm doing, see what you guys think, get some input from the viewers, see if there's even any interest in watching this, because I think researching stocks and doing all that stuff is super interesting. I hope you do too over time because I think, like I said, it's a great way to gain money and grow your current savings over time. All right, so I'm using OBS. This is the first time I've ever done something like this, so I'm going to try to do what I want to do. I don't know if I'm going to be able to, but all right. So this is my current portfolio, which I'm not going to go into the quantities, but these are my holdings. We have Palantir, Nvidia, Tesla, Google, Microsoft, Coinbase, TSM, Apple, Shopify, the Vanguard S&P 500 ETF, VOO, which I'll go over in a second, the NASDAQ 100, QQQM, Costco, Amazon, ASML, and cash. So the weight is the current percentage of my portfolio that is in that stock, and then we have the gains over time. So Palantir, I think I bought that before its lowest point. I started buying it on the way down. So I bought it around $20. I think it was around 20. I might have started buying at 40 actually. I started buying at 40. Let me see. Actually, I'm going to pull up the chart. All right, take a look at this. Let's talk about Palantir real quick because I do think that is a very interesting stock. So here's the Palantir. Oh my goodness, look at this thing. That is crazy. So let's zoom in. Let's go to the daily chart. Weekly's fine actually. And I'll get into technical analysis as well because I do think learning the basics is important. So we see at this point, at its peak, Palantir got up to around $45. There's a lot of hype on Twitter on Palantir, which is what got me interested. I started researching the company. So I actually started buying, I think around I want to say this point, somewhere around this area. It did the big run up, it started correcting. I thought this was the bottom right here. So I don't want to get too much into technical analysis in this video, but for simplicity, I thought this was the bottom. I thought from here it was going to start going up. I do use a little bit of Elliott wave in what I do. So I thought this was a wave 1, wave 2, and it started wave 3. So I started buying around this area, around the $20 to $30 mark. And as we see here, it went all the way down to $5. So in this position, which is now up over 800%, I was down quite a bit. I did buy some more as this was going down to add to my position. But at one point, I think I was down 50% on this position. I held and I actually sold part of my position, because I think my average cost basis at that time was around $20 per share. And I think I sold around here, around like the 25 to 27. I sold like half of my position. The reason why I sold is because I held for this entire period, 2 years, without making any gains. So once I started making some gains on my position, I sold half of it just to get some of that capital back because honestly, I was a little frustrated. I held it for so long, but I still did believe in the company, so I kept half my position. Look at what this stock did. Holy. So at the bottom, it went from $5 and now it's at $180. This is a stock to where if you put a substantial amount of money in, you became rich. So we're currently, like I said, at like 180. This could, the way this is growing, it'll probably go up, but great stock. That is my position that has grown the most. It is not my largest position by weight though. Nvidia is actually my largest position by weight, which is up 314%. I should also say I have not added to Palantir. The reason why is it went up really fast and I forget the term people use, but I was so locked in because I think my cost basis after selling was like $18 per share. And like once it jumped up from like 20 to 40, I honestly didn't think it was going to jump up as much as it did. So I was super focused on that $18 per share and I didn't really want to add to it. I should have added to it. But to be honest, I was just locked in on my current price and I was scared to jump in. Nvidia is a stock I bought at a really good price and I have added to over time. I think I just added a share last week even. But that position is up 300%. Tesla, I started buying years ago. I've been holding on to it. It's now up 70%. Google, I just bought this year. I bought at the lows during the whole Trump tariff thing, and I've held on to those. Microsoft, I've been buying over time. Coinbase, I've held for a long time. TSM is a new position this year. Again, I added to that or started this position during the tariff fiasco with the stock market was going down. Apple, I've held for a long time, but it has been performing well this year. Shopify, new position this year. The Vanguard VOO and QQQM are what I dollar cost average into basically every week, or at least every other week. I put a portion of what I invest into those ETFs. Costco, I've held for a little bit. I would love to add to Costco because I think it's a great company, but I think its valuation is a little high right now. Amazon new position this year. Again, during the tariff stuff. ASML, I just recently bought prior to the run up. I'm going to pull up ASML real quick because I think that's interesting. So ASML, I actually bought a share. I think it was around 640. So real quick, I don't want to get too much technical analysis today. Oops, let me pull the chart up. Sorry about that. All right. So this tool right here is a retracement, and it's all based on algorithms and all that stuff. And typically they call this the golden zone when it retraces to the 0.18 to the 0.618 to the 0.65. Usually that's typically a good retracement for a wave one, and it's a good time to buy. That doesn't mean it can't go lower. There are stocks that do go lower, but I bought a share around 640, and I actually sold it. I think it was probably around this peak, around like 800, and then it went down. So I was like, oh, I made the right choice. I bought really low. It went up. It started going down, and I sold that share. And I recently bought back in. I want to say somewhere. I'm on the weekly chart. Let me go to the daily chart. All right, so I bought down here. I sold like right here. It went down, and then I bought right around here again when it started finding support around these moving averages. And I'm glad I did because it went from like 700 to now 930. So I'm currently up. Where did ASML go? 18% in like a week. Legit 1 week. So real good. Then I have 5% in cash. I'm waiting on some dips on these stocks. But yeah, this is my overall portfolio. As you can see, very tech heavy. A lot of the hyperscalers like Microsoft, Google, Amazon. Coinbase is what I use for my supplement store. Did I say Coinbase? Shopify. Shopify is what I use for my PR Breaker supplement store. I really like Shopify. They're making a lot of advancements. I think this is a good growth stock. Let's pull up Shopify. I wasn't going to go over the charts really, but let's go over this. So Shopify had its really big peak, and look how far this one crashed. So let me show you about the retracements we were talking about. My goodness, look at the. Oh, I did it again. Sorry, guys. All right, here's the chart. Again, this is my first time using OBS and trying to do this, so bear with me. Look at that growth, but then look how far it crashed back down. It was all the way up at around like 175, went down to 23. Holy moly. So using this retracement tool, get to about the very bottom of the chart, go to the very top. So this, depending on if I got that bottom correct over here, this went past the golden zone that I was talking about, past the 786, almost got to the 886 retracement. That is ridiculous. If you bought during this time, you are looking really good right now. I had bought previously. So I bought around, that's right. So I did buy around I bought one share prior to the split, and it was a 10-to-1 split. So then I got 10 shares, but I bought at $68 on the way down. So I did the same thing. Like I held it, it got back up around here. I sold it because I wasn't sure what was going on in the market. And then I've recently bought back in. I wish I would have just held my share the entire time. So that's an important thing. When you're choosing individual stocks, you need to be willing to hold a stock through a downturn. It's very hard to time the bottom. You should buy a stock based off the strength of the company and its financials and understand that it's possible that it could go down. Obviously, that's not ideal, but so then I sold it, recently bought back in, and Coinbase is growing well. Right now, I'm hoping it retraces to this gap right here. I don't think the correction is done. I hope it goes down here, and then I'll add around like one at the 130 mark. But yeah, all right. I got way off base. That is not even what I wanted to talk about. But let's talk about, before I get into what I'm doing with the $10,000 chart or the $10,000 portfolio challenge. What you can buy in if you don't want to buy individual stocks, because picking individual stocks can be more risky. Instead of buying individual stocks, you can buy ETFs, and ETFs are baskets of stocks. The main ones people buy are the S&P 500 and the QQQ, or you can buy the VTI, which is the total stock market. And what is cool about these things, if I can find the portfolio of stocks it's holding, the majority of what these funds hold are the top companies in the country. So you're going to get the ones that have good growth. You're getting Nvidia, Microsoft, Apple, Amazon, Facebook, Broadcom, Google, which is called Alphabet, Tesla, Berkshire Hathaway. Those are the top 10 holdings. So, I mean, those are really, I mean, I am investing in these individually as well, and I also still hold these ETFs. But if you want the least resistance, least friction, easiest thing to do, just buy VTI. Easy. Now, a little bit more focused than VTI is VOO, which is the S&P 500. So VTI is the entire stock market. VOO is the S&P 500. But as you'll see, a lot of the top holdings it's going to be the same. The top 10 holdings are going to be exactly the same. There's going to be a greater weight or percentage of that fund in these top holdings, but you're only holding about 500 companies as opposed to what is VTI at? As opposed to VTI, which is 3,487. So 500 companies versus 3,487. So more concentrated in the top 500 companies. And over time, VOO does slightly outperform VTI, which is why most people recommend the S&P 500 VOO. The way I set up my other portfolio is 30% of my entire investment portfolio is VOO. The portfolio I showed you earlier is one of my portfolios, not all of my investments. So this one, the weight is 20%. I'm aiming for, I think I want to do 30% and 10%. So 30% VOO, 10% QQQ once I deploy more cash over time. And that's basically a safety net to ensure that your portfolio goes up over time, because you might make some bad calls. But as I'll talk about when I get in my 10,000 hour portfolio, what I'm coming to find is if you do put in the research and make wise decisions, as you'll see, the gains from the individual stocks are going to outperform VOO and QQQ. Both of these ETFs are up around 22%, and a lot of my other stocks have grown way faster than that. So I am going to look into investing more into individual stocks and less into ETFs over time. But I do also have a portfolio which is just strictly VOO and QQQ. Let's go into QQQ. And I should talk about that at the front. I basically have a growth portfolio and a very safe portfolio, which if I feel like I could need that money sooner in the future, I don't really want to have it tied up in risky stocks. So that's just VOO and QQQ. So QQQ is, again, you'll see a lot of the same stocks as in VOO, but you're going to have more of the tech stocks and higher percentages, because this is only 100 something holdings. So top is Nvidia, but this is 9%. VOO was 7%. VTI was like 5%. So more of your holdings are going to be in these top companies, but the same thing. Nvidia, Microsoft, Apple, Broadcom, Amazon, Meta, which is Facebook, Tesla, Google, Netflix. So all the same companies, Costco, Palantir. So the reason why I put 30% in VOO and 10% in QQQ is QQQ, it is a little bit more riskier, but it does outperform VOO over time. So I feel like having more of these growth tech stocks in your portfolio is a good thing, because it's going to grow more. You could make an argument to just do QQQ and not VOO, but VOO is going to be safer. All right. Hopefully I didn't ramble too much. I don't even know how long I've been recording. I don't even know what I was going to say, but let's get into what I'm going to do for my portfolio. So, like I said, I'm going to do a 10,000 hour portfolio challenge and see if I can beat the performance of the S&P 500 over the next year. The goal is no ETFs, so no VOO, no QQQ, just 10 individual stocks max. Right now, so I'm going to show you what I've bought so far. I just started this last week. This past week, I was trying to wait until I started this series. I was waiting on getting my new computer. Let's see if I did. But as you can see, September 16th, I transferred the 10,000 into this portfolio. And then the reason why I did that before I got the computer is I saw some good prices and I wanted to grab some stuff before the market started going crazy. And I only did a small buy of HIMS because, again, I didn't really want to deploy a ton of cash until I started this portfolio challenge. But as you can see, HIMS is already up 13% in the last week. I wish I would have deployed more cash. But I want to go over... I wrote something down, but I don't have it with me. I want to go over my thesis for these stocks. But let's just go over what I bought so far real quick. We have HIMS, Chipotle, Texas Roadhouse, and AMD. Now, as you saw in my other portfolio, I have a large holding of NVIDIA. NVIDIA and AMD are competitors. They both do the semiconductors, which are very important for all the AI boom that's going on right now. I do have NVIDIA is my largest holding outside of VOO, so I do have quite a bit in NVIDIA already, and it's up 300%. So AMD, let's go back to the chart. Actually, let's look at NVIDIA chart real quick. And if you do end up watching this video through this whole point, let me know if you like what I'm doing, looking at the charts and going over things as I talk about it. But NVIDIA is basically at all-time highs. We can see it's growing very well. It's going to keep growing over time. I mean, the NVIDIA chips are crucial to this whole AI boom. They're not going anywhere, but they're at all-time highs. So there might be less total percentage growth compared to AMD, which is not at all-time highs. They are growing off this low. This was the tariff low, but they have yet to reclaim all-time highs. So I do think AMD might provide greater growth right now compared to NVIDIA. If I was only going to invest in one of the two, I'd invest in NVIDIA because I do think it's a safer, more guaranteed return. But I do feel like AMD may provide a greater return in this next year, simply based on the fact that it hasn't grown as much. And I already have... Actually, I was going to say I should go over the stocks I'm considering holding, but I'm just going to go over these four today. But yeah, AMD, semiconductor microchip producer, competes with NVIDIA. Yeah, actually, it's not great. So they hit some resistance here, which was the peak back in 2021. So they got above it, hit that. So yeah, we'll see. I do think they'll probably retrace a little bit more, and I'll plan to add to. I only bought one share because, again, I didn't want to really start my full positions yet in this portfolio. I kind of want to buy over time, over these next few months before the end of the year. But yeah, I do think AMD has a lot of room to grow, so we will see what happens there. Okay. The next, let's go with HIMS. So HIMS is a stock I've been watching for quite a long time. Let me pull back the other chart. As you see, I've been charting for a long time. They were doing well, and I saw them growing. I was actually looking at them when they grew from like this point all the way up here. I didn't invest in them at that time because their main revenue source seemed like the GLP-1s, and I really didn't see a reason to get behind this company. It didn't seem like I didn't really see a growth trajectory. But what made me invest in them this past week was they just introduced HRT, specifically TRT, for men. They're currently supplying, I always forget the type of the anti-estrogen, what it's called. I always want to say epiclomin, but I think it's like endoclomin, whatever. They have one source for TRT, but then next year they're adding an injectable testosterone and also an oral testosterone with, I believe it's an exclusive ingredient or an exclusive agreement with the company that supplies this oral testosterone, which seems to be just as effective as injectable testosterone. Now, why this makes me want to invest in them is because I'm not on TRT. When the time comes and I need it, I will get on TRT. I'm not against TRT at all. But when men go to get TRT, oftentimes their doctor gives them a lot of pushback and does not want to prescribe it. A lot of guys end up not going on or can't get it for whatever reason. With Hims, they have in-home blood testing. So they send you the blood collection kit. You put it on your arm. It collects your blood. You send it to them. The cost of the blood test, I believe, is subtracted from your prescriptions for testosterone. So it seems like super easy. You can do it through your phone. It's all virtual. You don't have to go into a doctor's office. I can see that growing a lot. I can see that doing very well. I'm gonna pull up a website. So this is Qualtrim. This is Joseph Carlson's stock program. If you're gonna follow one other stock person, if you're getting into investing, I highly recommend Joseph Carlson. He's what got me. He definitely helped shape my investing philosophy after the first year and has led to a lot of great results. This is his program where you can analyze stocks. I highly recommend you subscribe to Joseph Carlson on YouTube. And the Qualtrim is $10 a month. If you get to the point where you are spending a lot of time investing and viewing stocks, definitely worth the $10 a month. But let's get into Hims. So let's do the revenue on the trailing 12 months. Look at the revenue growth. They are growing consistently and at a fast rate. If you look at their total subscribers are growing at a really good rate. Shares outstanding, basically how many shares. They're adding shares probably they give to executives, the CEO, whoever, as part of their compensation packages. So the shares going up is not great. You'd rather see shares going down. But this company is in the growth phase right now, so I guess it's to be expected. Free cash flow is going up. I know they have the GLP-1 stuff going on. There was some potential lawsuits. This could be due to spending, but overall, I feel like this company, while yes, it is probably a riskier purchase than something like Nvidia, Google, Amazon, I do think there's probably a greater chance for growth here. This is going to be a volatile stock that goes up and down. Again, look at this chart. Went all the way up to 73, went all the way back down to basically 23 in 2 months. So this chart is pretty volatile. I do think there's potential for it to grow. I'm willing to place a small risk on this stock to see what we can do. But yeah, so that's Hims. Like I said, I think my main investment thesis is the TRT. I think they're also adding HRT for women. The ease of access is going to give people to these medications. And the fact that the revenue is growing, subscribers are growing, it looks like there's a lot of potential here. So we shall see what happens. Next up, Chipotle. I've always loved Chipotle. Chipotle was actually the very first stock I bought a long time ago when I knew nothing about stocks. I'm talking way back in the day. I'm talking like, like way back. Oh, I don't got the screen up. See, I'm really bad about pulling the screen up, but I'm talking about like back here when I didn't know anything about stocks. I bought one share of Chipotle and I thought that was good. I gotta make sure my screen something funky. Okay, I guess it's all right. I guess I can make this bigger. Maybe that's what it is. Anyways, I bought one share of Chipotle. Thought I was doing something. I bought it for like $200 a share, which that was before the split. It went from like 200 up to 2,000 something prior to the split. They did right here. I think it was a 50 to 1 split. Oh my god. So yeah. So that means if you owned one share, you got 50 shares of that, but the price was divided by 50. So it pretty much did it at the peak. So what's that 69? What's 69 times 50? That's let me do this real quick on my phone. I don't feel like calculating that. 69 times 50. It was at $3,400. So I bought my one share at around $200 and I sold it around $400. So had I held on to that one $200 share, it would have been worth $3,400. So yeah, interesting times. Anyways, going to the present day of Chipotle. So again, going back, I've always eaten at Chipotle. I like Chipotle. I think Chipotle is better than Qdobo. If you think otherwise, that's fine. But I've always liked Chipotle. It has gotten a lot of bad publicity. Just the overall sentiment about Chipotle with the quality of food, the quantity of food they're giving you, and things like that. It's getting a bad rap. The sales itself, though, the same store sales, which is a metric restaurants use to gauge growth, were down recently. But if you look at the revenue, I mean, the revenue is still going up. I mean, it's going up a lot. The locations are increasing. They're expanding into Asia and Mexico, so they're expanding internationally. Net income, I think it was, let's see if it's on here. Okay. It's not on here. I thought they might have same store sales, but the shares outstanding are decreasing. Chipotle announced a $750 million share buyback. So I feel like the company is doing a lot of things right. They could just be going through a minor speed bump with, again, the quality, consistency, quantity of the food they're giving customers. Customers don't like it, so they're not supporting them as much. Currently, the price is right around that golden zone ratio, and this is the peak of the last cycle. Again, I don't want to get too much into Elliott Wave, but typically there's 5. Can I draw on this? Let's see. So with Elliott Wave, things go into a 5-wave impulse like this. Wave 1, wave 2, wave 3 is the biggest wave, wave 4, wave 5. Basically like that. So we see down here, this is the first big wave. So wave 1, wave 2, wave 3, wave 4, wave 5, and then reach wave. So that's the big wave 1. I think we're in the next cycle to where we've done wave 1, wave 2, wave 3, possibly wave 4, wave 5. And again, I don't want to get too deep into Elliott Wave, but typically a wave 3 does not retrace this far down. So what a lot of people would say that are big in the Elliott Wave is this isn't wave 3, this is wave 1 of wave 3, meaning it'd be something like this. And I'm only showing this because I kind of use technical analysis for my entry points in the stocks, but I still do look at the financials to determine if it is a good purchase. So it could be something like this, and then, whoops. Let's just say, so that would be all of wave 3, with this being 1, 2, 3, 4, 5 of a bigger wave. And if you look at charts, like let's look at Costco. Like that type of growth that I just showed there is not impossible for, it looks crazy when you see it like this, but over the course of years, that could happen. I mean, not saying that Chipotle is going to get the Costco size, but I mean, this chart's doing something similar. But again, I like Chipotle's food. I think they can come back from the negative sentiment they're facing and regain consumer trust, improve things where they need to improve things. And I feel like this is a good spot to buy. They are right in that golden zone. If we zoom in on the daily chart, this is the peak of that wave one. It dipped below it briefly, came back, and now it's finding support. So we'll see if that sticks. But Chipotle, I feel like there is a lot of potential here. All right. The final stock that I've bought so far. Oh, we did talk about AMD. The final stock that we're going to talk about today, and then I'll end this video because this video is way longer than I thought it'd be. Texas Roadhouse. Now, as you saw in my other portfolio, I don't really have any consumer stocks outside of Costco. So this will give me some diversity. Texas Roadhouse is another restaurant that I like, and if you've ever been to a Texas Roadhouse around dinner time or any time, and it is packed at all times. It is always packed. I only bought one share. I do feel like this stock could go down further in price. I'm going to erase some stuff. Let's erase this for now. So if you look here, we see a gap. This was right after their earnings. They had good earnings. The market responded well. It gapped up. A lot of times gaps will fill over time. It's not always the case, but most of the time they do. So if we look at this stock, this could be an ABC correction. It's about the same. So this could be the full correction if you're looking for technical analysis. So that could be the bottom. We don't know. Now we look at this. This is not looking great. This is below all the moving averages. Let's look on the weekly chart. This is even below the 100-day moving average on the weekly chart. That's not looking great. If you look at the retracement, that's past the 786. So realistically, if it does not find support on the 886, it's going down. It's going down farther. When you put on, so a lot of times if this right here is the ABC correction, I should also explain that. So with the Elliott wave 1, 2, 3, 4, 5, the correction in the wave 2 and 4, the corrections, they go A, B, C. A, B, C. And whether or not you believe in this stuff, some people do, some people don't. I do think it's a useful tool that you can use to find good entry points. So they do the ABC correction. If this is the A, B, C, typically what you'll see, again, none of this is financial advice. I don't know what I'm doing, guys. I could just be drawing lines on the chart. Typically, the C wave is at least as long as the A wave. And if we put that wave here, look where it takes us, like right about around this area. So I venture to say this gap is going to be filled. And it's also the 0.382 retracement. I'm venturing to say Texas Roadhouse gets down to around 135, 136. I think that's a bet I will take. But Texas Roadhouse, really good steaks, really good food. It's not like the best steakhouse, but for the price point, it's really good. I think it's gonna bounce back up over time. Very strong company. Let's go to Qualtrim. Texas Roadhouse. All right. Look at the revenue growth. I did it again. Look at this revenue growth. Look at Texas Roadhouse revenue growth. Boom, huge. Let's look at net income going up. This was the COVID when the restaurants were closed, so that's why there's that giant dip there. Let's look at the number of restaurants. Number of restaurants are increasing. And Texas Roadhouse also has Bubba's, Jaggers, so they have different restaurants. They're expanding, they're still adding more restaurants. Look at the shares outstanding, decreasing over time. Look at the dividends. So when companies make a certain amount of money, once they have so much profit, they give some of that profit back to the investors. Dividends are increased. Like, this company financially is doing very well. Restaurants are a risky company to invest in, but I have two of them, Chipotle and Texas Roadhouse, which I think, based on both their stock charts and the financials, like, I feel like they're good. They've got a lot of potential for growth. But all right, show that again. So yeah, as of right now, I've only deployed $580, and I've bought a couple shares of Hims, Chipotle, Texas Roadhouse, AMD. So I got 4 more slots I can fill with stocks. But that's what I'm looking at right now. I think in the next, this went way longer than I thought it would. Way longer. I didn't really have a plan, but I think in the next episode, what I will do is go over the other potential stocks I'm looking at. And I think my other goal with this portfolio is I don't really want to have a ton of overlap with this portfolio that I have, because I still plan to add to NVIDIA, Google, Microsoft, Amazon, Shopify. Like, I plan to add to those stocks here. So I don't necessarily want to put those stocks in this $10,000 portfolio. That being said, if I was going for overall safest way to invest this $10,000, I would probably pick those same stocks, to be honest. But with this $10,000 portfolio, I'm going to do stocks that might be a little bit more risky that I still think are great opportunities. So yeah, I don't even know. I mean, this video was a lot different than I thought it was. Let me know what you guys think. This was kind of just all over the place. I can make it more focused. I really just want to do this video to make sure I have this whole OBS system set up, that I'm recording properly. I hope this is recording and it's saved, because this was 40 minutes of talking. If you did make it all the way through this video at this 40-minute mark, let me know what you think about what I talked about. Let me know what you'd like to see me cover. Let me know your thoughts. Let me know if you want to give some, if you are an investor and you come across this video, what 3 stocks are you looking at? There are a few cool stocks I'm looking at. What do you think has the potential for growth? And tell me why in the comments. And if I see 3 stocks that are mentioned a lot, I'll pull them up on screen, do a little chart. If you want to see me do more technical analysis, let me know. Again, I don't know what I'm doing. None of this is financial advice. I'm not a professional. Don't copy what I'm doing. Just kind of use this as a way to learn, expand your knowledge, do your own research, decide what to do. Thank you for watching. We are out.